I really want to emphasize how important it is for people to pay attention to what I'm saying about investing in gold and silver. These precious metals have a long-standing history as a form of wealth, and relying on the dollar, which is essentially at the tail end of its fiat currency experiment, might not be the best strategy. Just look at what's happening with the London Metals Exchange and COME private. Well-informed investors are pulling out metals at an unprecedented rate. In fact, the amount of silver available on the London Metals Exchange is at its lowest point ever recorded. Over the past year and a half, a staggering 70% of registered silver has been drained from COMEX. It's shocking to see that in just one day, 45% of all kilo gold bars, equating to 26 million ounces, were delivered off the exchange. Who has that kind of cash to make such massive purchases? Just 2 weeks later, we witnessed 5% of all 100-ounce gold bars being delivered off COMEX as well. When you take a bar off the exchange, it's a one-way transaction. You lose liquidity. I've even had clients share their experiences, like one who struggled for nearly 5 days to withdraw $50 million from her bank to place an order with us. She insisted I share her story to highlight the challenges of accessing funds, including threats of regulatory intervention. The trend of large-scale metal withdrawals from COMEX is alarming, and it's indicative of a significant supply bleed. Typically, metals are moved from a category called registered, which can be delivered, to eligible, which means they're not for sale, but can be registered if needed. I'm holding on to these assets tightly. They're definitely not for sale. A lot of folks might just keep their holdings in an eligible category, but I prefer a different approach. Instead of letting them sit safely in that category, which is great for security, it means that if one of my clients, who has a stash of 1,000-ounce bars, decides to cash in on Elon Musk's enticing offer, we can easily switch them from eligible to registered. This transition allows Elon to take ownership of the bars, as all the necessary details like weights, bar numbers, and authenticity are already verified. However, this can only happen if the bars are part of the COMEX ecosystem. When assets are delivered off COMEX, it raises some eyebrows. Recently, I came across a report from Reuters and Bloomberg stating that central banks purchased a staggering 399 tons of gold in the third quarter of 2022, which is valued at over $20 billion. This figure is a whopping 340% increase compared to the same quarter in 2021, and nearly doubles the previous record of 241 tons set in Q3 2018. Bloomberg referred to these gold and silver buyers as mystery whales, speculating that they might be countries like China, Russia, Saudi Arabia, and India. Notably, these nations are all part of the BRICS group. We're witnessing significant withdrawals from exchanges, and it's a one-way street. Once these metals leave COMEX, they lose their liquidity. This trend of massive drawdowns has been ongoing since I started discussing it back in 2020, and it's only intensified. Central banks have been on a gold buying spree like never before since 1967. So, why are they investing in gold and silver? Well, gold is considered a Tier 1 reserve asset, and there's a clear shift away from reliance on the dollar. It's interesting to see how all these elements start to connect. We often overlook the significance of the dollar's status as the world's reserve currency, mainly because it's been the norm for so long. However, reserve currencies tend to shift every century or so, and the dollar became the go-to option when we transitioned to a fully fiat currency system, thanks to Bretton Woods and the trillions of dollars circulating worldwide. Right now, we're witnessing a pivotal moment where various countries are beginning to assert their independence from the long-standing dominance of the West. The signs are clear. We might soon wake up to a new financial landscape that challenges the dollar's supremacy. China is already signaling to Russia that they're ready to collaborate on energy infrastructure alongside other BRICS nations. This shift is tangible, and once we see an official announcement and OPEC, along with Saudi Arabia, move away from the dollar as their settlement currency, it could trigger a massive sell-off of dollars by countries that have held them for decades. This scenario could lead to a significant economic reset, with the dollar flooding back into the U.S., resulting in rampant inflation and possibly hyperinflation. As inflation rises, interest rates will likely follow suit to counteract the diminishing purchasing power. I genuinely believe that if you're not thinking outside the box, you might find yourself in a tough spot. Being heavily invested in dollars could lead to financial ruin. When I discuss gold and silver, I want to clarify that these aren't just investments. They represent enduring wealth. They have stood the test of time, surviving wars, hyperinflation, the Great Depression, and pandemics, making them a reliable store of value. Traders around the globe are stockpiling metals, and when you look at a powerhouse like JP Morgan, which recently shelled out a staggering $920 million fine to the Justice Department for manipulating gold and silver prices, it's hard not to take notice. They've amassed over 45 million ounces of gold and a whopping 1.2 billion ounces of silver, marking the largest physical holdings of these metals ever recorded off their balance sheets. This trend among the most savvy and influential traders, whether they're U.S. commercial banks or foreign central banks, shows a significant shift towards accumulating precious metals. The London Metals Exchange and COMEX are seeing a drain of resources, and with gold being reclassified as a Tier 1 asset, it's clear that many countries are aligning themselves in a new direction. The 13 OPEC nations are banding together on the Belt and Road Initiative, while 200 countries at the IMF are clamoring for a new financial system. The choice of gold as a Tier 1 reserve asset raises questions about why not opt for special drawing rights from the IMF instead. When you connect all these dots, it paints a picture of a dollar that's on shaky ground, and it's evident that the West is living on borrowed time. If you can't see that holding on to dollars exclusively is a risky move, then you might not be viewing the global landscape through the right lens. It seems inevitable that a significant shift will occur, especially as OPEC begins to move away from the dollar, and the fact that they're not even responding to Biden's calls speaks volumes. As these nations pivot towards BRICS and away from Western influence, it's becoming increasingly clear why owning gold is a smart strategy. People are really getting into gold and silver these days, and it's all about wealth rather than just making an investment. These precious metals have a long-standing history of representing true wealth, and I can't stress enough how important it is for folks to think about adding them to their portfolios. Relying on the dollar right now feels risky, especially since it's part of a fiat system that seems to be nearing its end. Honestly, I believe that the transition away from the dollar won't be a smooth ride, so considering gold and silver as a solid form of wealth could be a smart move.